right, Bubba. Here we go. The market fell pretty good last week. You pretty much nailed that one. And the market kind of turned around a little bit at the end of the week and said, okay, hey, maybe a little overblown. We had some AI talk about financed, I guess, brokerages. Schwab got hit. And that's terrible because I think that the news on AI is a little overblown on this stuff. What's going on? The narrative seems to change literally every day. Epstein files, Iran. Is there fatigue going on with all this nonsense, or are we getting to the point where people just don't care anymore?
I don't think people ever really cared. I think we've got really a lack of participation in markets. I think you saw the big sell-off. You and I talked Tuesday and Thursday last week. We had the big sell-off, and then, of course, Friday, we had the rip-your-face-off rally, which continued yesterday. But notice how each and every day with the rally, the volume continues to dry up. I think we're at the top end of the range. We were very oversold. The rally was due. I wasn't surprised at all by the rally. Obviously, we're never concerned. We never understand how the force of it will be, how big, but the rally was coming. I think now you're looking at a market that the sell-off is coming again. Now, again, how deep will it be? I don't have the idea. We are still consolidating. The markets have gone, the ranges have narrowed. We go from overbought to oversold. And in fact, the Dow futures went from oversold to overbought on Friday. And of course, they were lower yesterday. So at the end of the day, I believe we're headed lower. I think the news is not very good. We'll see jobs tomorrow. We'll see CPI on Friday. But we know jobs are going away. We know there is not a lot of good news on the horizon. The K-shaped economy is killing most consumers. So we'll see what happens. Again, I'm not going to predict it's going down tomorrow, but I would bet you a lot of money that it's going to go down. And this, in the first half of the year, we're going to see some pretty significant sell-off.
Okay, a big sell-off. Predicated by what? I mean, just it's going to come out of the blue, or are you expecting something big? I mean, it looks like Iran might actually kick off. We have now the biggest buildup in Middle East since Desert Shield and Desert Storm.
I don't think the Iran is a factor. I think the real factor is the massive amount of debt in this country, the losing of jobs, the real potential of stagflation. I mean, we get closer to it every single day. That is not good, people. That is not a good situation. That means high prices and no jobs. So how do you eat? We have so many warning signs that we continue to ignore, from the AI boom, okay, the amount of energy that it consumes, the additional costs to the taxpayer and the consumer. Look, at the end of the day, 5 or 6% of the population is enjoying what's going on right now. The rest is struggling, and I feel bad for them, but it's going to lead, like every other time, it's going to lead to something. And of course, I told you last week, we're at 306% of the M2 money supply based on what the market is worth today. It has never been near this level. The closest it came before was the internet bubble. So are we in a bubble? Yes. Is it going to collapse today? I have no idea. Will it collapse at some point? 100%. Just like we saw with gold and silver and Bitcoin. These markets are no different. They get to a point where they get so overextended that they do fall apart.
Yeah, the numbers that we saw this morning, I made a post about it this morning, that credit card delinquency, 12.7%. U.S. loan delinquencies alone rising 4.8% just in fourth quarter of last year. And it's the highest since 2017. I mean, we're talking some serious numbers here. And of course, now record student loan delinquencies now at 16.3%. That's a lot of money, that delinquency.
Now, you realize that credit card number is false. It's actually much worse than that.
I think it's worse, yeah.
Okay, it's much worse because a lot of those people were able to move their debt so they didn't have to go delinquent to 2027.
Oh, yeah, so sure.
This is the other part of the blow up. Again, look, I can't predict when. And I listen, my investments, I'm certainly not getting out of because I'm hedged them. But from a trading standpoint, I am waiting for the opportunity to get short. I mean, I will sell. If we hit 70-14 in the S&P today, I will sell today. Okay. Now, I'm not saying that's the top forever, but I will sell at 70-14 today.
Can you tell me why?
Yeah, it's just above a high. It's right in an area that I think would be put the legs on it. And I think the low volume, the entire thing puts us at overbought conditions at a new high. I think the market will fail from there as we watch the Dow. It's kind of more of a mathematical equation more than anything else.
Okay.
Overextended, 3 standard deviations from the mean, bang, look, goodbye.
And I'm just looking at delinquency rates, and I'm just reading about the deep South is where the most highest delinquency rates are. Mississippi, Louisiana, and Alabama leading the nation. I think you're right. This K economy really is harder hit. And we're also seeing it that it's the highest rates on 90+ past date due. So it's not only delinquency, but it's also delinquency in a way that people just aren't paying their bills at all. Is this going to get back to the point where people just throw their keys at their house again and say, screw it, I can't afford it anymore?
It wouldn't surprise me at all. I mean, you're seeing just Florida just reported their mortgage new applications were down 72%. Okay. Now, Florida, that's you. It's a great state, beautiful, a lot of good things there. Yeah. Look, you're going to have the point where your people are going to run out of money, they're going to run out of opportunity, and they're going to run out on their debt. Because one of the big things that we know is that even if you file bankruptcy, you cannot file bankruptcy on your credit card debt. Okay, that was the lobbyists took care of you on that deal. So you'll see people that will walk away and say, screw it, what am I going to do? I mean, and with the way we do business today, you can improve your credit score by making a phone call. I mean, people blow it off, let their credit card down, and then make all those phone calls and get their credit score back up again.
I'm looking at the unemployment rate around the country, right? And wow, this was November, but it's even worse now. And if I look at this thing just right now, this is the latest numbers from Fred, obviously. But California is really hurting. Florida's hurting. New York's hurting. These are some serious Chicago area, really high. Seattle, Washington, Texas. It's not really Republican or Democrat states. It's pretty much just the cities, right?
Look at Big Beat. When you replace management jobs with AI, which is what is happening.
Yeah, I got you.
Those jobs are not coming back. It's very popular in California. That's where a lot of it originated from. Right. So no surprise. Anywhere there's high technology, the management jobs are going away. And believe it or not, the Gen Zers now? Is that the new group?
The Gen X, I don't even know where they are anymore.
The younger group are firing guys that are in their 60s. 60 is no longer old. 60 is really the retirement age should be 70 something, right? Yeah, not 66.
Yeah.
A couple of guys I know that had big jobs in tech got fired. Okay. They got cut loose. They've been with Google for 30 years since they started, fired. So this is a problem. We can continue to walk away and ignore the problems. You can continue to take your charge card and charge it and hope that goes away. You can continue to work on by the month. But when you lose your job, okay, when the economy blows up, there's nowhere to go. And this is the lack of preparation that our people are ignoring, including the government, including the president. Okay, again, look, I'm a fan, but including all of it, nobody cares. Nobody says a word about how shitty, this economy is. That's just the bottom line. And again, for most people, this is a real struggle. And unfortunately, as you've heard from Amazon, from Meta, from Google, from NVIDIA, they're all laying off people. More jobs are going away than are coming. So we're losing jobs at a faster rate than we're creating them. Not good.
How bad is it? If you were to compare this to 08, or let's say 07, before 08 really hit, if you could say 2017, if you could say 87, where are we in the feeling that things are just going to fall apart again?
87 was pretty predictable, okay, as was 08. Again, it's predictable is a funny word, right?
Yeah,
predictable because we don't know when. I would say that today is worse than all of those. Okay, to me, the situation and the setup for everybody is worse because not only are you losing jobs, not only is inflation still on the rise, debt is on the rise. And the other factor that we didn't have in 08 and in 87 is our farmers are getting crushed.
They are totally crushed.
They cannot. They're actually the guys that are planting into this planting season, which has started, are planting at a loss, hoping for a big year. Okay. So the price, so we brought a whole new group, the original founders of the country, which were farmers,
right?
They're not doing well. Okay.
No.
And so when you add that into the equation, you add in the massive amounts of debt, you add in the massive amount of over leveraged banks, which I don't care what they say. I don't care about the stress tests that they tell us how good they are. These banks are over leveraged. Okay. And when the dominoes start to fall, I think this ends up being worse than 08.
Okay, I'm going to pull up a chart of, and you just talked to me about it earlier today for the show about commodities. I'm going to pull it up right now. This is the corn right now. You're a futures trader. Corn prices are a little higher than normal. This is the daily chart. There's a weekly chart. I mean, comparative to the because the yields are way up over the last years. I'm going to pull up a monthly chart of corn. Where is the farmer making any money?
They're not. Their input is much higher than their output is right now. From hydrous ammonia to other things, other products that they use. The only break that the farmers have caught recently is in crude oil, which is now starting to rally back up again, and in natural gas. But at the end of the day, their input costs are so high. They're working on very skinny margins right now, if margin at all.
Yeah, and I'm looking at the monthly chart. I mean, obviously, anybody goes out and buys a steak right now, which I'm already jonesing for a steak right now. I think, almost all-time highs now.
Yeah,
$250. I mean, going to the grocery.
Live cattle is $237 right now. Feeder cattle is $364. I think these prices are ridiculous. I say it every time I'm on air. But again, to me, I think, and when we look back. And when we look back in history, I think you're going to find out that people took advantage of this particular time. You know, there was a shortage. There was a legitimate shortage 2 years ago in the herd. I find it hard to believe with American technology, with what we do and who we are, that there's still legitimately a shortage that can support these prices of $237 or $2.37 a pound.
Some people say that the weight loss drugs are really affecting. You know, people are eating a lot more protein now. I'm going to change it, but just a little bit before I let you go. Harley Davidson came in with a really bad. They actually missed on everything. Literally missed on everything on the earnings. Up now, it's up almost 4% today. You can see the earnings come out really bad, but yeah, they came up. This is literally Middle America. This is literally what we just talked about. Middle America is not doing well. If you look at a monthly chart of Harley Davidson, this was an $80 stock, now sitting at 20.
Yeah.
Right. That tells me a lot about this country right now, right?
It should tell you a lot. Listen, if you're not, this is the problem that we have, Big B. People don't pay attention until it directly affects them one way or another. They don't care. They don't pay attention. And then I look at it like this. I don't know when it's going to happen, but I continue to see warning signs. The bells keep going off in my head that there's a problem here. There's a problem there. There's a problem there. I mean, you know, the energy problem. We haven't even talked about that. Your energy costs are going through the roof.
Yeah.
Okay. Because, of course, AI. Copper prices are going higher because of the conductivity of copper through AI. So, once again, your costs are going up. Your income is not going up. And, of course, they continue to mask under these fiat currency system, which is total crock. But at the end of the day, that's where we are. People don't care until it directly affects them. And by the time people say, it's too late.
I mean, oil will be affected a lot by Iran.
You think so?
If Iran
we've had all this trouble. Oil's only gone up $3-4 since the big mess. I think that oil is a little bit weak. It could be. Listen, I could be wrong. I'm not saying you're wrong.
No, but I mean, I could totally be wrong. That's what I'm saying. I mean, I'm trying to figure this out. If I'm looking
I think oil. No, I mean, one of the things in today's markets, we know it. There is no surprise news, right?
Right.
Everybody knows there's a potential going on. So if they're really concerned, you would see prices much higher than they were right now. Now, could it happen overnight? Yeah, sure. Hey, listen, you can wake up tomorrow, crude oil could be $80. Okay. But I think the lean has to be that the markets are pretty efficient and pricing things in, other than what we call the fundamental news bomb, where it wasn't a scheduled news. It wasn't something that you knew was going on. It just showed up overnight. Okay. And that's the one thing that can always create a problem, but I don't see it. I think that, but listen, I could be wrong. The markets may be wrong here, and they might not have priced it in enough. And maybe there is a war, and maybe crude oil goes to $80 again. I can't say. I can't say one way or the other. Right now, I'd be a seller. That's the only. I can tell you, I'm a seller at 66.
You're a seller at 66 on oil. I like that. Okay, and you talk about war, and I'm pulling up Palantir right now and AI, and this should be the hot stock, right? I mean, this should be the one that the government's paying Palantir for all the data, and even it's down 138.94. I went long the other day when the big sell-off happened at it's 129.5, and I see it here at one, and I sold it not too long, just a couple days ago, and here we go back down again. So yeah. I think maybe the world is maybe correcting itself, shall we say?
Well, I think, Palantir, as you may or may not know, Michael Burry is holding a big short position, the big short. Not that he's always right, but again, when he's looking at it from, debt to income and all the things that are not important to me, because when I'm trading, I only care what happens next 20 minutes. But right. For him, he's looking at something because he's going to hold it. I believe that the AI stocks, for the most part, are overpriced for now. Mm-hmm. Again, it doesn't mean they're always overpriced, but for now, I think that we've gone too fast, too far in many. I think if you look at the second tier of the AI stocks, INOQ, QBTS, some of those, they're getting clobbered. And typically that's a precursor to the bigger ones going next, right? First they come after the weak, and then the stronger ones get hammered. And look, like I said, I'm expecting a pretty good haircut in the market, and I would not be surprised to see us be down 20-25% by mid-year. Okay.
And what are you doing to position your portfolios for that?
Well, my portfolio is always hedged, so I don't really care.
Right.
I look forward to that because I'd be buying more stock, because I'm not a non-believer suddenly that the stock market is going to collapse. Right. I think it's got a chance to go down quite a bit, but I will be preparing with short positions and positions to prepare. But first of all, before I can do anything, Big B, the market's got to show me it's ready to go down, because I'll have plenty of time.
Okay, so what is it going to, what thing out there is going to tell you this is it, the big one's coming?
I'm looking right now as I'm talking to you. I'm looking at the S&P chart. Okay, the ES chart. It's mini S&P. Okay, I told you I'm going to sell it at 70.14. That breaks it above. That takes it right out to about 370 basis for the mean. I would take that sale there. Okay, but if I wanted to be a little bit more aggressive, if there was a little bit more activity in the market, and there's not, I mean, today's volume is pathetic. But if there was a little bit more action in the market, I would actually be looking at 69.80 right now as a potential spot to short. But due to the lack of action, I'm really not all that interested right now. So I have to have a level. But if I look at the chart, you can see that that's very much near the top end. From a standard deviation point, it's about 2 standard deviations from the mean. From a resistance and consolidation, it's at the top of resistance. So to me, that's a spot that if I were looking, I'd be looking to sell. But again, this lack of activity in the market makes it like I'm not really interested in getting involved. Because listen, if I was going to sell it, let's say I would end up selling it at 69.70. So I missed 10 points. I'm not working for 10 points, so it doesn't really matter.
Yeah, I see what you're looking at. I'm pulling up the rounders out now. And I can see exactly what you're talking about right here, right? You're talking about this topping up right here. Yeah. You're not thinking we go up any higher, correct?
I mean, again, we might. I would love to see it pop to 70.14, 70.17. I would love to see that. But again, if I'm looking today and I say that's a spot that I would look at, barring it doesn't pop. Certainly, you could look at all 4 major indices: the NASDAQ, the Russell, and the S&P are all at the top end of the range, all on the cusp of either breaking back down or pushing to new highs. To me, I don't think they have the strength or the energy to push. I think the VIX has shown us, we talked last week, I thought the VIX would trade over 20. It did. It's back down to 17.5, but it is higher today. I think that, again, there's going to be some volatility. You got a jobs number tomorrow. You got a CPI on Friday. And if we get some business, then I'm going to look to sell. That's really what I'm looking for.
Yeah, I mean, all these this thing right here is rounding out for me, and the RSI. Everything. I think you're right. I don't see any bullishness in this market right here.
What's to be bullish of? There's nothing to really be bullish of. Really, again, I'd like to be bullish. Now, listen, I'd like everything to be perfect. I'd like everybody to be thriving. Okay, but that's not the case. Okay, right. You have too many people struggling, and you have too much debt. You have too many people that are going to end up walking away. You have a market that somehow has managed to hold these levels, and certainly that's why I'm not telling you to go get short now. Look at the big picture. The uptrend is still in place. It's not like we're breaking down. So you have to be very careful. And the biggest thing I can tell you to everybody is if you're going to make trades like this, know your exit before you enter.
Right. That's what I always tell people. If you can't tell me where you're going to get out before you get in.
If you're wrong, you have to know where you're going to take that loss at. It does not become a permanent loss. So just be careful.
I love it. I love it. I'm looking forward to seeing you out in Vegas here. I think I'm coming out in the summertime, maybe.
Let's go.
Bubba, I will see you on Thursday, man. Looking forward to it.
Thanks, Big B. Have a great week.
You too.